In this video, I'm going to show you 3 simple scalping strategies using free indicators on Tradingview to help you make better trades. Scalping is a short-term trading technique which requires quick decision-making, and if you are new to trading, then scalping is not the best option for you. Another reason that scalping is for experienced traders is because most scalpers use margin trading, which is a risky trading method. As a scalp trader, you are looking to take a position during an impulse in the market, so you need to understand where the direction of the market is going before you enter a trade. It's a general rule to not go short in a bull market, as you have more risk of being stopped out, and otherwise you don't want to go long in a bearish market for the same reason. Remember that the trend is your friend. To identify the general trend, I use the simple moving average. Make sure you are on the 1-hour chart, go to the indicator tab and type in simple moving average. Clicking it will add the indicator automatically on your chart. If you are new to Tradingview, check out my video tutorial on my channel. I like to change the color of the moving average line to yellow, because it looks more clear, but you do as you wish. If the current price is above the moving average, the trend is bullish. If the price is under the moving average, the trend is bearish. It's that simple. Let's start with the market order strategy first. Open the indicator tab and type in Market Structure Break and Order Block by MREB-KB. Open the settings of this indicator and change the fib factor to 0.273. Make sure the zigzag option is on and leave the rest as it is. We will now see a red and a green block on our chart. When the price breaks above the green area, it's time to place a buy order. But when the price breaks below the red area, we should be looking to place a sell order. Don't forget to always set a tight stop loss right after entering your trade to protect your liquidity. The second scalping strategy uses the Fibonacci retracement. When the market makes a strong move upwards, take your Fibonacci retracement tool and place it from the lowest price point to the highest. Wait for the price to come down from the top and retest the 0.618 point of the Fibonacci retracement. This is the golden ratio level, providing support, so it's generally a good level to place a buy order. And the third scalping strategy uses 2 common indicators, the stochastic and the Bollinger Bands. When the price moves outside the upper or lower Bollinger Band, we want to get ready to place our trade. Just wait for the stochastic to confirm the entry signal by crossing either above 80 or below 20. If you take a long trade, set your take profit slightly below the upper Bollinger Band. As for a stop loss, analyze the price action and use the recent swing high or low depending on your trade direction. Remember, the information in this video is no financial advice. I'm not a financial advisor, so always do your own due diligence before you trade with real money. I can't guarantee that these scalping strategies will work every time. Crypto is extremely volatile and the price can shoot up or down anytime. That's why it's so important to always do your research before you go into a trade. If you want to know more about scalp trading, I recommend you to watch my Bitflex scalping video on my channel. I will leave the link below in the description along with my Bitflex link, so you get the best possible bonus if you sign up with Bitflex. I hope you found some value in this video. If you did, hit the like button below and consider subscribing to stay updated when I post a new video. Thank you for watching all the way to the end. Have a wonderful day, and stay safe.